Welcome back, YouTube. I wanted to do a state of the market update. I haven't done one in a while just to kind of get like the total um, viewpoint of what's really going on in the market. I wanted to take a look here at Doge first because we've been talking about it and what my expectations were as far as for it being in this current trend. And it's pretty much holding up so far. We're looking at pretty much a consolidation here until its primary liquidity zone and really just a balance between the bottom of that zone and the 14-day moving average. And this is typically where Doge sits historically when it's grabbing liquidity or its actual like bottom price. You'll see some slight rejections down here on this lower area, but typically it bounces out relatively quickly, as we've seen here in the past. And this is kind of where it sits in this zone here until there is a catalyst, until there is some type of news or promotion or whatever that kind of causes attention to it. People kind of jump in at that point, and then you'll see a rush up. But typically speaking, this has been the zone where Doge likes to sit while it's waiting on the liquidity to come into like the market. So typically, if the liquidity comes into the market, that's when you can kind of expect kind of like the rising tide raises all boats sentiment. Or if sort of a Dogecoin specific topic comes in, then of course you can kind of expect a run off of that. But this area here is Doge is kind of doing exactly what we thought. The 72 200-day are running parallel, so we don't have any reasons here to kind of think that there was going to be like another breakdown. Nothing negative has come out as far as for short term or like trading the news. So as we talked about last time, I'm kind of expecting a continuous trend off of here and kind of like trending sideways here like we've done until there's a catalyst here. I'll give you an example. We can go back to August of last year. This is kind of the zone that was hanging in. It was up, down, and we got some major catalysts. This is the acquisition of Twitter by Elon. It's been almost a year now, but yeah, so typically this is what we can expect here is kind of trading sideways into this zone and literally just kind of like waiting on liquidity to flow into the market. So I expect more of that until we get a catalyst or something Dogecoin specific. Going to the market indicator, we are sitting roughly at around like 26,000 for Bitcoin. And this is really a big deal here because as we're talking about, we need, if Bitcoin doesn't hold up at around this 24 to 26 range, we're going to look at possibly coming down to the very low 20s, so somewhere between like 20 and 22,000. And we're getting some evidence of that here because we're about to have another divergence here and have a cross between the 72 and the 200. And remember, so this is what was looking at here, kind of when we were getting close. You can kind of see the trend, and then we had the cross of the 14 and the 72, and then of course we got this drop, and then we had the 14. And we were kind of raveling up, and then we had the cross of the 14 and the 200, and we've seen this drop here. But they did gain momentum roughly in the same place because the 14 crossing a 72 and crossing a 200 is not the same thing. So we had some serious buying pressure come in, consistently staying in at around this mid 20 range. So this could be enough to save it, but at the same time, a 72 crossing a 200 is a much stronger indicator than a 14 crossing a 72. So these are 72 days, a much stronger average. So it's looking like we're going to have this cross here. So if that is the case, and I'm willing to say that's more than likely going to happen, we're going to retest this level down here again, this low 25 range. And if that doesn't hold, we're looking at at least a 2 to 3 grand drop. So that is something to kind of expect, and you can kind of expect that money, to leak out of the crypto market because Bitcoin is one of the major indicators here. So just kind of keep that in the back of your mind that we are getting close to that gap down. So looking here at Ethereum, let's see, we have the 72 crossing the 200 here. You had the the gap down, and kind of like what we were talking about with Bitcoin, it did catch in the same area. So again, this is a lot of buying pressure coming in at around that 1500 mark. And we had a rally after that. So this is a really good place for, because typically Bitcoin and Ethereum, they trend together and the cycles are very, very similar as far as for liquidity going into the market. But Ethereum is in a much better place actually, because even here, if you're looking at the indicators, you can say that the 72 has crossed the 200 and it regained relatively quickly and is still here at the top of its zone here at the peak here for this level. So if you're looking for a gap down, yeah, we're not even close because yeah, we still have about 200. Yeah, there's still several $100s in there. This is a red candle here, but again, that's not indicative that we're going to go down. And the indicators, there's still a lot of space here between these moving averages. So the only thing I can think of is maybe Bitcoin can cause like a panic sell and suck some liquidity out of the market. But Bitcoin is actually in a better place than Ethereum excuse me. Ethereum's in a better place right now than Bitcoin. And that's typically they're together and it's hard to kind of catch them on opposites, and it's not in Bitcoin's favor. So this is one of the rare times that Ethereum's in a better place than Bitcoin. So if you are an Ethereum fan or have been looking for an opportunity to get in on Ethereum, now is not a bad time to consider that. Let's take a look here. I want to go back to Doge, look at some shorts here. Shorts are going to the heavens. Not really. They're gaining. They kind of exited out and took out new positions here, but this is to be expected. Typically, the shorts when they come in and you have consistent buying pressure, that's just keeping Dogecoin in that zone that we looked at earlier. Shorts are typically going to take positions here and create those sell orders, and that's kind of going to keep that little I guess like tennis match of back and forth between the high and the low of that range. And so typically you'll see this kind of build up and then they'll exit a position here and you have Doge kind of run up to the outer part of that range and then they'll re-enter and they'll dip back down and stuff like that. So you can those kind of really just parallel each other. So I wouldn't pay too much attention to it until we got like a catalyst or the market started moving in general. So at the end of the day, it's not a big deal. This is kind of what they do, what they have done, and what they'll continue to do. So it's not a big deal until we get some bigger market indicators to kind of get some things moving. So that is my state of the market update. I wanted to just kind of update you guys on what I'm seeing in the charts here. Across the board, again, I do think Ethereum is in a better position than Bitcoin right now. Bitcoin, if it doesn't hold, which historically off of the last 3 tests, this would indicate another breakdown, at least of a few grand. But the thing about it is the last 2 breakdowns, the Bitcoin has recovered very gracefully. So will we recover and go back to this level? Or will we see that those lower 20 ranges somewhere between 20 and 22,000? That is TBD, but it's certainly something for you to watch for if you're looking to kind of average into those positions. Anyway, as always, let me know your thoughts as far as from the comment section. Thank you, and I will see you guys in the next video.